Hello guys, welcome back if you've seen my videos. If not, welcome. Please subscribe, like, comment, turn on notifications. That'd be amazing. So today we're going to talk about what's been happening in the markets over the past few weeks, kind of. Just a little bit of analysis basically, where I think the markets could go within the next few weeks to months, maybe even couple years. So the S&P here on Friday, June 26th, was down about 2.4%. This past month, it's also down almost 1%, and it's down from its recent highs by about almost 7% nearly 2 weeks ago, almost 3 weeks. And we are close to that 3,000 level, which is just kind of a psychological level for investors. Over the past 6 months, I'm sure you all know what this chart looks like. We hit the March 23rd lows here. We're up 35% since then, but since end of December, still down little over 7%. So that's big news, obviously, but most of you probably know that. Let's take a look at the Dow, down 2.85%. Since the March 23rd lows, it's up 35, and since late December, it's down nearly 13%. From its recent highs, it's down over 9%. So there's been a lot happening lately. Let's also take a look at the NASDAQ composite, down 2.6% and back below that 10,000 level after it had hit all-time highs by about 3%. So the NASDAQ had a good run up, and we're down nearly 3.7% from the high that it hit on June 23rd. And we have been above the 10,000 mark about 3 separate closes. So that once again is another psychological level for stocks. Wednesday, we saw quite a bit of a sell-off of over 2% for most of the indexes. And so today, why are we seeing the sell-off? What is happening here? So first, what's been happening is lots of index funds, pension funds, things like that have a certain ratio of stocks to bonds that they want to target. For some, it's 60% to 40%, 50-50, 70-30. And so with this big run up this quarter, the quarter started April 1st. So March 31st closed to now. The NASDAQ composite up nearly 27%. So the stock to bond ratio is becoming more skewed to stocks than these funds like to see. So end of the quarter, they just balance that out, sell some of their stocks, or if bonds overperform, they'll sell some of their bonds, things like that. So that's putting some selling pressure on the overall stock market, especially where we're in the last few days of the quarter. Quarters go from January 1st, March 31st, April 1st, June 31st, so on. 3 months, 4 quarters in a year. So we're seeing lots of selling pressure because of that. Also, something else that's happening is reopening is starting to slow down and go the other direction in a few states. Florida, Texas, for example, their governors have rolled back certain things to keep their people safe. I won't go into the specifics, but you all pretty much know what I'm talking about. So, where can I see the market going from here? Let me just move this over. So here is a chart of the S&P. Well, it's SPY ETF, but it tracks the S&P. See, down 2.4% here. But let's see how it's doing over the 180-day 4-hour chart. So we had hit our last high right in this area, mid-February. So then we had this fall as certain things in the environment ramped up. You can also see, look at this volatility here. I mean, so many people were selling, and then in this rebound, quite a few people were actually buying too. But this is pretty much unseen volatility. Didn't mean to do that. But let's take a focus on this time frame. So this last high up here, June 8th, right in the afternoon, we hit pretty much a high, and you can see we're near a low. There was the low back here, and I think we'll revisit that, especially with these fears of the economy going into a little more kind of uncertainty than it's been in. That's big news for the stock market. People are uncertain of what's going to happen over the next 12 to 18 months. That's just how it is. That's how it's going to be. And so, as an investor, you have to try and take advantage of that. Try and find opportunities for you. And hopefully, we have some of those opportunities soon. I can see the index going quite a bit lower. It's lost about 7% from these more recent highs. At this point, it had lost around 8.3% from June 8th to June 15th. And today is June 27th, but yesterday was June 26th. And you can see the entire day was just a big downtrend, even into the close. So RSI is getting low. It has been kind of low though. And you don't look at just RSI. In this case, it's a bigger overall what is happening. So states rolling back that. And the recovery process is going to take a while. It's not necessarily going to be a V-shaped recovery, but if this is all over soon, it's going to be a fairly quick recovery for lots of people. And stocks just aren't mirroring that. They're showing that, look, we hit a low on March 23rd, and now mid-June, end of June, we're all the way back up to all-time high levels. Not quite on the NASDAQ we are, but pretty close. So do I think that stocks will go lower? Yes. I think that I wouldn't be surprised to see another maybe 5-6% decline over the next few days. So let's take a look at where exactly that could be. Let's try and get, there we go. So June 26th close. We have this entire weekend for investors to process this. Who knows what news could come out this weekend also. That's a big thing. But this day here's the 29th, the 30th, and then July 1st, 2nd, and this is a long weekend here. We go from the 2nd to the 6th. So I think by the end of next week, stocks may be down another 4-5%. So kind of this level right here would make sense. I don't expect it to be straight down. Like, we're not going to lose that over the next 2 days. but I think it'll be fairly quickly. Obviously, over 4 days, I'm forecasting a 4 to 5% loss, so that is a big deal. Lately, it hasn't meant as much, and I do see this as more of a gradual decline, like kind of like what we saw here. We saw a 4.5% loss over 3 days and 11 hours, so 4 trading days here. 4.5% loss. I think this is kind of the same pattern we're going to see heading into this red bar here. The bar may be a little further up too. This area is more likely. And I don't see stocks going up within the next week. Maybe if some surprise news comes out, it will, but I think it's more likely for surprise news to come out in the negative than it is in the positive, just because of the current environment. So do some of your own research, all of that good stuff, but I think stocks in the shorter term, and then looking over the next few months too. So let's actually do that. Let's say, obviously I can't go super far out, but I think that at some point stocks, well, the S&P, we may have another 15% decline in this area on the longer term. Let's extend that to the right, just so as the days come and go, this line will still be here for me, but I think that that line is a target, not necessarily a target, but where I think that stocks may go over the next month, maybe 3 weeks. Again, do some of your own research. Maybe you know of stocks with big catalysts coming up. Look into those. Those are always good, especially when the market's going down. Try and take advantage of that. So let me show you an index. Well, not quite an index, it's an ETF. It's leveraged short on the NASDAQ. So past few days, it's up 13%. So do some of your own research, but if you continue to believe that over the next few days to possibly couple weeks, we're going to see a bigger decline overall, the SQQQ, I always get it wrong. Sometimes I put 2, sometimes I put 4 Qs, but SQQQ, just look at this. It's interesting. It's $8.30. Don't get stuck in this for the long term. As soon as you think the market's going to turn around, obviously that's hard to find, but as soon as you have that feeling, well, I think I should realize gains, do that. Do some of your own research. Keep up to date. I will talk about news, where I think stocks are going on this channel, so please like, subscribe. Go watch some of my other videos. Turn on notifications. Come check out my videos for the future. Thank you and have a good day.